Welcome to Sathish Speaks channel. Whenever the markets are at a high, investors normally they realign their portfolio and do the balancing. The schemes, the funds, the stocks, whichever has given the maximum profit, they actually book profit. They sell, they redeem, and they book profit and realign their portfolio. So please be reminded whenever you are booking a profit, you got to pay something called a capital gain taxation. So in this video, I'm going to explain to you what is debt taxation, what is equity taxation, and most importantly, there is a concept called tax loss harvesting. So is there a way that you can reduce your capital gain taxes? So let's understand all the three concepts in this video. So let's understand about the equity taxation first. If you are holding any portfolio for less than 1 year and you are actually selling it, the scheme or a fund or a stock for less than 1 year, you are holding and selling it, then for whatever the profit you are making on the particular sale, 15% is the tax you got to pay, that is short-term capital gains from equity. And if you are holding any stock scheme, you are holding for more than 1 year and you are actually selling it after 1 year, means the equity taxation law says long-term capital gains, the first 1 lakh profit or capital gains are completely free in your as tax free in your hands, and you got to pay the tax for more than 1 lakh alone. So if you are making a profit of 2 lakh rupees, you have a liability to pay a tax only for the later 1 lakh rupees. The first 1 lakh rupees is completely free. If you are making a profit of 5 lakh, the first 1 lakh is completely tax free in your hands. The rest of the 4 lakh, you got to pay 10%. So that is short-term capital gains and long-term capital gains from equity. And please be reminded, you have to pay the tax only when you realize the profit. That means you are actually selling it. If you made profit in your portfolio and you are not selling the schemes or stocks or funds, you don't have to pay any taxation. Tax is there only for realized profit and realized capital gains. That's about equity, and let's move on to debt funds. Debt, it is very similar to equity. The only difference is the duration. The short-term capital gains is about 3 years. That means that if you are holding any fixed deposit or company mutual funds or NCDs or anything from fixed income products for less than 3 years and you are selling it and you are making a profit, means it will be directly added to your income. So depends upon your income slab. Whichever the income slab you fall into, you need to add these capital gains and you need to pay your taxes accordingly. This is short-term capital gains for debt. So when it comes to long-term capital gains, there is incentives available for investor. That means that anything more than 3 years, if you are holding that portfolio and selling after 3 years, means you can enjoy something called indexation benefit. And with indexation, your taxation will be only 20% in case of long-term capital gains in debt portfolio. So that is the reason that every HNI customers or investors who falls into the maximum tax slab, they actually hold their portfolio for 3 complete years and then they sell so that they can enjoy the indexation benefit. That is all about long-term capital gains of debt taxation. So we have seen equity, we have seen debt taxation. There is a concept, something called tax loss harvesting. So first, the disclaimer: if you are actually strategize this tax loss harvesting system, means please consult your auditor, take a recommendation advisor from your auditor. This is a introduction for this particular strategy. Consult with your auditor if you are actually implementing this for your own portfolio. So what is this tax loss harvesting? It means that let's say that in a particular year you made a 10 lakh of profit from a long-term capital gains in equity, and then you in your portfolio there are funds or schemes or stocks which is already in losses, let's say, which is also you are holding for more than 1 year. So you have profit of 10 lakhs and you in your portfolio more than 1 year holdings which are making losses also. By 25th of March on a particular financial year, what you can do is voluntarily sell these particular stocks which are in losses and book volunteer losses, so that your taxation is not effectively 10 lakhs, it will come down, depends upon your portfolio sale. So you don't have the obligation to pay the 10 lakhs taxation. And then after you actually selling this particular stock April 5th or 6th, after 10 days of the sale, After completing the financial year, what you can do is you can buy the same stock at the current level. That means that you are actually selling it and you are making an entry in the next year of in your books, in your portfolio. So when you do this, you can effectively bring down your capital gains from your portfolio. This is called the tax lock harvesting. And as I mentioned, please consult your auditor when you are actually implementing this particular strategy. I'm Satish, financial consultant and author of the book called Untold Wealth Secrets. And if you have any questions on equity investments, mutual fund, or portfolio management, my WhatsApp number is there in the description. Kindly connect with me. I'll be happy to assist you. And if you want to join my free WhatsApp group where I'm giving investment insights and personal finance strategies, you are free to join, and I'll be happy to welcome on board. If you like this content, please click the like button because you enjoyed it and you got benefit out of it. Let the other investors also get benefited out of it, because when you like, it will reach out to maximum number of people and it is an encouragement for me as well. And when you comment in the comment box, what happens, there will be a personal connect for you and me. Whatever the questions you have, I'll be happy to assist you if you comment in the comment box. If you have any recommendation for future videos, please comment. I will be happy to put it live. So I will meet you with another interesting video with another interesting information. Stay tuned, subscribe to my channel so that you will get a notification. See you. Bye bye.